Hello everybody. So today a quick video. This is more of a rant style video. There's really not many updates, but one of the videos is I need to stop CNBC. This is so annoying. CNBC was running this headline with no content whatsoever for like an hour, dropping the stock, saying, "Oh, shares slide. Elon Musk total compensation package denied." And you read the article, it's empty. There's nothing. There's no quality whatsoever. It's crazy. And the worst thing is, by the way, like the ad blockers, I don't have an ad blocker. I have zero ad blocker for CNBC, and I still get this. Journalism, give me a break. Give me a break. To get a clear answer as to what this means, you have to go to Twitter, and it is entirely my fault. It is entirely my fault, because I go to CNBC. I need to quit this habit of going on CNBC. It is all about if it bleeds, it leads. All about if it bleeds, it leads. There is no good content whatsoever on that website. And so what does this mean? What does this mean? Is it a big deal, the whole story about the $56 billion compensation plan being denied or canceled? Well, not really. Based on the many inputs I've read on Twitter from lawyers weighing in and professionals in this area weighing in, not really a big deal. There's really two options for Elon Musk. Option one is to appeal it, and many people are saying, "Oh, you should just appeal it." And the other second option is to draw a new compensation plan and actually bring up Musk up to 25%, maybe repaying the plan and then putting a new compensation plan, and have people vote again. These seems to be the two paths, and in any way they are not there's no significant meaning to the downside to the stock of Tesla for either of these paths. And if Elon Musk appeals, well, who knows how long that delays the process? Is it going to be another year, another 2 years? This is a lawsuit that was done about a 2018 compensation plan. So we're talking about old stuff here. So it's really not that big of a deal, but the media makes it seem like it's a big deal. And the price is dropping, and it's just so frustrating that there is no content, and you have to go on Twitter to find the real news and figure out whether it's really that big of a deal. The two main options, again, either of these two options could be good, but the second option is obviously better, to have everybody just vote on a new plan and give Elon Musk the 25%. And if you give Elon Musk the 25%, you would remove some of the concern about that needing 25% to grow AI, knowing that Elon Musk should have close to 23% of Tesla stock by 2028 when some of his options vest. So he's gonna get there either way. It's actually a 2% story because he's got options vesting in 2028. So that story, it's really an argument between 25% and 23%. It's not that big of a story, but anyways, I just want to add that let me play the devil's advocate. If you're consistent with yourself, CNBC, then you should run a headline looking at this as a positive, because traditional Wall Street folks, when they see this headline, they would look at it as a positive because they hate Musk. They want Musk to exit the company. So they would look at this and say, well, this is good because this is going to leave Elon Musk to lead the company, and we're going to get a real CEO in there, if they were consistent with themselves. And if they were consistent with themselves also, they could say, oh, well, Tesla is just going to get some money back because Elon's going to have to give back some of his shares. So it's going to get more money into the stock. And actually, if you go on Twitter, you notice that some people are saying, so are we getting 50 new billion or 50 billion coming through the door? The stock should be up, right? So if you're consistent with yourself and with a short-term thinking, the stock should be up. Right, that should be a good news per the way Elon thinks about it. But no, this is always negative. The news are always negative. It's really getting frustrating, and I feel I feel horrible for the people who only cover Tesla. I cover Tesla very, very little on this channel. But, if you were watching at Rob Moore's video talking about stopping quitting Tesla because he's tired to say for the 70th time that it's actually a software update and not a recall, that it's a software update, right? That would get very, very, very frustrating to have everybody be against this company. And that's why you get the alpha, right? That's why the stock is cheap. That's why the stock is cheap. If you look, I was looking at Tesla earlier today, calculating energy and where energy is headed. The present value of the stock does not even incorporate the profits of Tesla Energy, and Tesla Energy is not even on anybody's radar in Wall Street. Anyways, the point is, the only point that I have to this is, it's not a big deal. It's not a big deal. They have options. They have two good options. One bad option, which is Elon quitting. That would be a bad option. But otherwise, it's two good options. And the stock is dropping mostly on headline risk and uncertainty brought about by the headlines and algos. And that is the way I interpret this. And really, the point of this is I gotta stop watching this channel. I gotta stop watching CNBC. It adds no value to the hyper growth investor, no value to the innovative investor. That's it's not my first time, but it's not my first time talking about it, but Anyways, if you want an update on Tesla, you may know that I bought the $200 strike price LEAPS. LEAPS, that means right to buy Tesla stock. Call option, right to buy the Tesla stock in January 2026 at $200. So I bought those LEAPS when the stock was 208, so lost a little bit on that. But I actually also bought the 190 the other day, the $190 strike price LEAPS for January 2026 again. So 2 years roughly, and I bought those when the stock was at 185. So I should be back at the same level that I bought them because the stock in after hours is back at 185. My plan for Tesla is to continue buying some LEAPS, and if the stock gets into the 180s or the 170s, I secretly hope so. If it gets there, I'll buy maybe another leap or two or a few leaps options. You never know when you should really go hard into a stock, which is kind of like my habit is always buying all the way down and then all the way up. It's because you can't know where the stock is headed. But I believe this company to be heavily undervalued, and I know it sounds crazy. And in the comment section, some of you tell me, well, look at the price to sales, look at this, look at that. Well, you know what? If you look at Tesla's price to sales, if you look at Tesla's numbers, it's actually not that expensive of a stock. There's plenty of SaaS, software as a service companies that I've covered on the channel that are way more expensive than Tesla. Many of them twice as expensive than Tesla. Stocks like CrowdStrike, stocks like Snowflake come to mind, and I think it's important to be consistent here. Anyways, let me move on from Tesla. I also bought some Nubank LEAPS. Nubank LEAPS because this is the tweet that I made earlier today. So I paid $333 for a contract for the right to buy 100 shares of Nubank at $7. And Nubank, when I bought, Nubank was trading at $8.87. So you have $187 of intrinsic value that needs to be removed because that's you got to look at this money as you putting money into the stock. This is not lost money because you're buying a contract for the right to buy the stock at less than what it is currently trading. So the true cost is actually $333 what I paid minus the $187 in value that I get back in intrinsic value that I've purchased, right? So it's actually $146 per contract. So it's insanely cheap when you think about this because it's an $8.87 stock, and you can book that price. You can secure that price in 2026. In January 2026, you can secure that price of $8.87 for only $1.46 per share. This is one of these stocks, and hence the title of this video, Volatility. Of course, options are priced based on the volatility, the implied volatility that the market sees. But this is one of the extent where I fundamentally disagree about the future volatility for Nubank. I think the volatility is going to be, upward and high and up volatility, and so it makes very little sense for me to this option to be priced so cheap. If you know in my universe, or maybe in your coverage universe, in the stocks that you follow, if you know of stocks that are hyper growth stocks that are trading as cheap as Nubank, by all means, let me know, because I am interested in covering them and looking at those. Because Nubank, for some reason, was very, very cheap, and I'm gonna be adding to my Nubank position through the LEAPS and not through the stock. I'm keeping the stock aside, in another account, but I'm gonna be adding these through the LEAPS in one of my new options, my new LEAPS portfolio that I'm starting. And the last update I wanted to do is Lantheus. I spent quite a bit of time today listening to calls of Lantheus. I've been studying this company for a few days now. And of course, I wouldn't jump into a position if I wasn't very impressed. And I am very impressed by this company because, I have this he must do something portfolio, and I have this bias towards very inexpensive stock. And this is a stock that is cheaper than StoneCo, and it's actually growing faster than StoneCo, and it's got, a little lower of an EBITDA margin, but barely lower, and it's almost a rule of 80. So this is a very inexpensive stock. If you see enterprise value over sales, you're at a 3 times enterprise value over sales, and it's a product that has a blockbuster drug. And I may have my own biases in investing in companies with blockbuster drug because back in the day, I was an early investor in AbbVie. And you may know that AbbVie had a lot of tremendous success with a blockbuster drug called Humira. And Humira, one of the best drugs of the past 10 years, was a blockbuster drug. And when I listened to the presentation of this company, it is very clear they have about 70% of their market, and it is very clear that this product is getting adopted. This Pylarify product is getting adopted, and it is on its way to becoming a blockbuster drug. These pharmaceuticals are expected. The use of these pharmaceuticals are expected to double within the next 4 years. And if you look at the results of this company, really you are nearing 70% of the business of this company being this drug. And I have little issue imagining at the rate of growth this company being 90% about this drug, Pylarify, which is a blockbuster drug, which is superior to so many other alternatives. And, it allows you to see if you have prostate cancer when other drugs don't let you see it as good. It eliminates false negatives. It eliminates false negatives, which is of the utmost important, because if you're going to survive cancer, you got to catch it early. Catching it early is key to surviving cancer, right? So if you want to survive, you got to catch it early. And they have a pending approval in Europe. So I'm very interested in this drug, very recession-proof. And, listening to this company, fascinating company, this area of radiopharmaceutical, fascinating area. And, the future pipeline also includes diagnosis is the main business now, but it also includes treatment, because you can actually use radioactivity and radioactive decay to actually kill cancer cells. And that's part of their next wave is to make a treatment radiopharmaceutical where you introduce isotopes that are going to stick to the cancerous cells and that are going to be radioactive just enough so that the decay can kill those cells. And this field, the field of medical technology is one field that is greatly overlooked, in my view, by investors. And my portfolio clearly has overlooked that field because I don't work in that field. But just because you don't work in a field doesn't mean you don't understand it and you don't understand the innovations. In fact, I don't work in most of the fields of the stocks that I cover on the channel, and I still invest in the stock. You would be stuck just buying index funds if you had to find a stock only in the industry that you work in most of the time, because most of the times the compelling opportunities are not always going to be in your industry. I'm specifically replying to a comment that I got saying, I would never invest in a company because it's not my area. As an investor, I think any area can become your area if you invest the time and if you study hard enough. And I'm very, very much loving this company. Extremely cheap, so I've been adding to it. Anyways, this was free updates. I accept this video will be mostly watched by my most faithful subscribers. I'm not hoping to get new subscribers out of this video. So thank you so much for watching. This was not investment advice. This is just entertainment, of course. Please like, please subscribe, and have a wonderful day.